I am waiting for a couple more trustees.
Okay.
Trustee Riley.
Yep, that's fine. We're just at 9. You want to wait another, there's Emily, I think.
Yeah, let's just wait just another few seconds here.
We're missing Jim Irwin and Jim Donnelly, right?
Correct.
Okay. We're just at 9. What do you think, Ellen?
I think, sure. Why don't we start?
Okay, great. Good morning, everybody. And Mark, who's suffering again from a power outage, but he has a great generator.
So far, anyways. I go blank. That's what happened.
Well, welcome to this meeting. It's my first as chair, and I thank you for your indulgence as I learn the roots and ropes and how to approach this, and thank Jim for his leadership. And our first item of business is to convene an executive session. So could I have a motion?
Excuse me, we should do roll call.
The roll call, see? I didn't learn the ropes. Roll call.
Thank you. Good morning, everyone. Emily Kane.
Here.
Trustee Doak.
Here.
I don't believe Trustee Donnelly has joined. Trustee Irwin. Trustee Gardner.
Here.
Trustee Cates.
Here.
Trustee McMahon.
Here.
Trustee Martin.
Here.
Trustee Riley.
Here.
Trustee Rotundo.
Here.
We are all set to continue.
Now I can do it. Thank you, Ellen. We need to have a motion to move into executive session. Could I have a motion for the Finance, Facilities, and Technology Committee of the Board of Trustees to go into executive session under the provisions of 1 MRSA, Section 4056-C, to discuss the condition, acquisition, or disposition of real property or economic development if premature disclosure of that information would prejudice the competitive or bargaining position of the University of Maine system. Could I have a motion?
So moved.
Second.
Moved by Jim Doak, seconded by, did you get it, Ellen?
I did.
Okay.
Trustee Kane. Yep.
Okay, then into executive session we go.
No, we have to take a motion first. Hang on one sec.
We have to pass. So far, I'm doing really well.
It's okay. Trustee Kane.
Yes, Trish, you're doing great. Don't worry about it.
Trustee Doak. You might be on mute.
No, yes.
Thank you. Trustee Gardner.
Yes.
Trustee Cates.
Yes.
Trustee McMahon.
Yes.
Trustee Martin.
Yes.
Trustee Riley.
Yes?
And Trustee Rotundo.
Yes.
The motion is carried.
We all here?
We should be all set to start.
Okay. Well, greetings, everyone, and welcome to the October meeting of the Finance, Facilities, and Technology Committee. Our first item on the agenda is the parking garage increase authorization from USM. This follows up on discussions that we have had over a number of months regarding the new residential hall and the student center and the importance of linking the parking to that. And I will turn to President Cummings.
Thank you, Madam Chair, and I will soon turn it over to Chief Operating Officer Alec Porteous in just a minute. This preparation for this particular garage, as the Chairwoman has said, is directly correlated to our ability to move forward with occupancy within the student center and within the residence hall that has previously been passed and is now in project development. I will say that we have put an enormous number of hours, perhaps hundreds of hours, into our connections with our consultants on this development project and have made adjustments according to what we think will be financially a better, a more favorable approach, and allows us to grow in the future. So I'll turn with that, as an overview, I'll turn it over to Alec Porteous.
Thank you very much, President Cummings. Good morning, everyone. I'm going to go ahead and share my screen and just work through some slides for the committee. So this project is part of our Portland campus development project. We're seeking authorization of up to $23 million to build a new 510 space parking garage. It's going to be located in Wishcamper parking lot adjacent to the existing garage. I'll talk more about the budget in a minute. We're hoping to finance $22 million of that 23. Our estimate right now is 22.8. I think that's on the conservative end, and I'll get into that momentarily. We've hired PC Construction as our construction manager risk. PC expects to deliver a guaranteed maximum price for us in December that we would be bringing back. PC is our lead contractor on the Portland campus development project on the residence hall and the Career and Student Success Center. They also just completed the municipal garage down in Biddeford, where they worked with our garage designer, Desmond Design Management. We've been working with Desmond for the past 14 or 15 months. So we think we've got a very good team. Based on PC's confidence around their estimate and supply chain considerations, we're requesting our full funding authorization prior to receiving the GMP. And then the supply chain considerations are particularly around precast and steel, and just making sure we get ahead of any of those issues that we could face. Key pricing variables in the estimate include soil mitigation and the foundation estimates, and then costs associated with city permitting. And I'll talk about those in a moment too. As far as additional background goes, the proposed 510 space garage would reduce the original design by one level, or 127 fewer spaces, and that's based on projected parking demand and financial considerations. So when we were presenting on an informational basis to you all back in May, we were looking at a garage that had an additional level. That would have been 5 levels and 637 spaces. This is 4 and 510. There's a number of factors going into that. One basic logic test, though, is that when we were designing the garage originally, we were factoring in law school demand, which is 152 spaces at peak demand with the law school moving. We've taken that 152 out for the time being. The math obviously lines up there. If you look down the slide, there's a little bit more detail in terms of as we think about this parking garage and the scale of it, we're thinking about both new parking demand from Portland Commons Residence Hall and then lost parking spaces due to construction. So for Portland Commons, we're bringing 580 beds online, and we've factored demand at 394 spaces. That's 68%, and that really mirrors what we see out in Gorham, what we had in 2019. So pre-pandemic parking levels of how many permits we had per student. Transitioning the Bedford Street surface parking lot, which is now going to be a green quad. It's currently a construction site, but we lose 130 spaces, or we've lost 130 spaces there. We've also lost an additional 73 spaces based on construction of this project, other lots, and the Portland roundabout project. So 203 spaces are offline right now due to construction. If we were to build in the Wish Camper lot, we'd lose another 91 spaces there. So it's that total of 294 spaces that we would be foregoing. That, in addition to the 394 spaces we're projecting for existing demand, puts us at total demand of 688 spaces. Mitigating factors against that are the 152 lost spaces, that demand that goes away, and then our projected transportation demand management program, which we've pegged at 10% of the existing 1,700 spaces now. So we think we can reduce demand by 170. And a little background on that is we've already reduced demand in terms of remote work by 68 parking spaces on the days. We have the fewest number of employees working remotely. We reduced demand by 68. Another thing that we can do, and we'll do more aggressively in the future, is spread out our course schedule. I think that's another way to meet that 170 total transportation demand management goal. Right now, our parking folks will describe to you that we don't have a parking problem. We have a peak parking demand problem. And I think we can manage that better. So revising the design, removing that floor yields savings of $1.7 million. The garage cost estimate, however, includes expanded foundations that would allow for future vertical expansion. So we would be able to add back the level that we're removing should demand exceed what we're projecting now, recognizing no one has a crystal ball. That's, the best way we think there is to approach it. And I've just noticed here in the middle of the slide some of the factors that we think makes parking such a dynamic situation on our Portland campus at USM, and some of the ways we think we really can manage demand. We're seeing more online and hybrid classes, not to mention more remote work. As I said, there's an opportunity for more effective course schedule management to reduce parking bottlenecks at high demand times. That's good in terms of managing what we need to build from a parking garage structure, but also just good for the flow of traffic around campus. If you've been at USM's Portland campus at a time where there is a bottleneck, the lines to get to 295 from Bedford Street in particular can get pretty long. And also along those lines, a smaller garage just helps mitigate concentration of campus parking in the Bedford Street area. Our most recent project cost estimate, as I mentioned earlier, is $22.8 million. That's PC's first estimate. It includes soft costs and all contingencies, so it's a total project cost. And it falls in line with what Desmond Design Management has been estimating, for the past 14 months or thereabouts. PC and Desmond have both taken a very conservative approach to soil management and to foundations. There may be some savings there if we don't need to use the whole contingency. That Wish Camper area is a former industrial site, so we want to be careful and not underestimate the potential costs. Obviously, we're going to do whatever we need to do to make sure any soil issues are mitigated, but hopefully they're being overly conservative and we see some savings there. I think there's also some value engineering opportunities that we'll be able to continue pursuing now that we have a CMA risk on board. On the other side of the coin, the city permitting process creates potential for what I call modest cost increases. The real factor there is that the city has passed an ordinance that requires all new garages to have 20% of their spaces equipped with EV chargers. We're not going to have that much demand, so we've been working with the city on a way to scale up EV chargers over time because they're quite expensive. We're looking at 11% or thereabouts right now at a cost of about $350,000. Looks like city staff is supportive of the waiver. We'll have to see if the planning board will grant it. We're in the middle of that process right now. If they made us go to the full 20%, if we were required to do that, you could probably add another $300,000 in cost. So that's the one variable hanging out. I think it's likely outweighed by potential savings around soil and foundations. Just other key budget factors. Going back to the May presentation to this committee, at the time I gave an estimate of $20 to $24.5 million. So we're in the middle, midpoint for now on that. And that was increased from the original estimate in Sullivan Lot, which is, the increase is based on a larger wish camper site structure, cost inflation, different materials that we're using. I'd also cite in those bullet points below additional costs from permitting requirements and traffic mitigation upgrades. Those alone add about $1.5 million to the project. The soil foundations are another $1.9 million. So you can see where some of those costs come from, in addition to just a larger size garage and the overall inflation we've seen in the construction market. I mentioned we would be seeking to finance up to $22 million of the project. At current rates, we pay about $46,500 to service each $1 million in revenue bonds on an annual basis. That estimate was updated recently by PFM. Tracy Elliott went back for another run, and it's actually closer to $45,000, but we've stuck with the $46,500 just to be on the conservative side. At a budget of $22 million, we'd pay about $1 million in debt service annually. We've added $75,000 in pursuant to Desmond's recommendation on a repair and replacement account. So that's a $75,000 deposit annually into what is a reserve for the building. All the new buildings we build at USM have reserves tied to them directly to address deferred maintenance down the road. And then we have an operations and maintenance budget of $107,000. So it's about $1.2 million annually to finance and operate the garage. And I've listed the 6 revenue streams identified below. I believe those are the same ones we showed in May. Cell tower rental revenue, $250,000, pouring rights revenue, solar energy savings, parking fee premium for Portland Commons residents. That would be for overnight parking. The increased transportation fee, about a 12% increase across the board. And then the conference revenue premium that we've identified, where we would take revenue from conferences and direct it to the building. Of those revenue streams, the top 3 are fixed. The bottom 3 are variable. And what I would hope is that we can continue to be entrepreneurial around conferences to keep student fees down. The more entrepreneurial we can be around conferences, and I think there's really an opportunity developing the Portland campus the way we are. If we can yield more revenue there, we can press down those 2 student fees noted, particularly the overall increased transportation fee. But those are the revenue streams that would feed that, and they amount to just north of that $1.2 million to finance and operate the garage on an annual basis. I'll move through the rest of these slides quickly because I know we're limited on time. We're in the City of Portland Planning Board process right now. We had our first workshop with the city on September 28th. That was preceded by a meeting with the neighbors on September 22nd. We worked very closely with the neighborhood over the past 15 months or so. The president and I have attended many meetings with them. I think that's gone really well, and we're very pleased to be in a good spot there. Good first workshop with the city. We're in front of the planning board again on November 9th. Second workshop, standard, hopefully to a hearing in December and approval there. And I just note that bid solicitation would begin in December with groundbreaking expected in the spring of 2022. And the construction schedule calls for us to be opening this garage on time with the residence hall. As the chancellor said, we do have a condition of approval to add 396 new spaces. So it's important for us to keep this project on the same timeline as the opening timeline, I should say, as Portland Commons Residence Hall and the Career and Student Success Center. The authorization that we're seeking today is to spend up to $23 million on the project. Previously, $1.2 million had been authorized. That was $400,000 for us to get started. Another $800,000 at the chancellor's discretion, which he granted. We've paid, I think the number is $482,000 today, with another $484,000 encumbered. So we're starting to bump up on that 1.2. And just a note at the bottom of the page, the board's March 2020 financing authorization contained $13 million for the parking garage. It was overall $95 million for the Career and Student Success Center, the Residence Hall, and the garage. that overall financing level remains sufficient, but it's allocated differently. We've worked with Tracy Elliott on that. What we would be doing is, at this point, we don't have any debt service associated with the Career and Student Success Center. We've managed to eliminate that, which is good for a variety of reasons. So it would be $72.8 million for the residence hall as planned, and then $22 million, keeping us just under that $95 million. Any additional expense for the garage, we would cover with existing university resources, but I'm hopeful that we can stick to 22. And then Trustee Riley, I can wrap it up here. This is just a matter of the site selection. So these are the last few slides, and then a couple renderings for committee members. This would be driving in, so you can see the existing parking garage to the west, and then looking at it, Glickman. And that's all I have.
Great. Thank you, Alec.
Thank you.
I am sensitive to time, but I want to make sure all our questions are answered. So if we can get the members back. Questions, comments, concerns? We will be, Roger. Trustee Cates, you're on mute. You're on mute.
I'm sorry, two quick questions if I could. One of the sources of revenue is pouring rights. What is that?
It's a system-wide. I had the same question myself, Trustee Cates, when we were doing this initially, but it's a system-wide agreement with Pepsi to limit to Pepsi products on our campuses, and each of the universities get a revenue stream at $157,000 is what we estimate at USF.
Okay, and the other question, the design that's set out in the last pages there, is that the design, or is that just a rendering of what it might look like?
I would say that's the design through schematics, and the expectation is it would look like that. That's what we've submitted to the city for our planning board process.
Thanks.
And I'm not sure I can see everybody, so just pop in if others have questions or comments. All right, thank you, President Cummings and Alec. Good presentation. Let's move on to our resolution. And let me read the text of that resolution for you. That the Finance, Facilities, and Technology Committee approves the following resolution to be forwarded to the Board of Trustees for approval at the November 15th, 2021 board meeting. That the Board of Trustees accepts the recommendation of the Finance, Facilities, Technology Committee and authorizes the University of Southern Maine, acting through the University of Maine system, to increase the authorization by $21,800,000 to a total of $23 million to construct a new 510 space parking garage adjacent to the existing parking garage on the University of Southern Maine's Portland campus. Additionally, that the board authorizes the increase in square footage of up to 168,508. Funding for this project will be from university-issued revenue bonds and other university resources to be identified. Do I have a motion?
So moved.
Moved by Jim Donnelly, second,
Second.
and seconded by Trustee Irwin. Ellen, would you take the roll?
Certainly. Trustee Kane. Trustee Doak.
Yes.
Trustee Donnelly.
Yes.
Trustee Irwin.
Yes.
Trustee Gardner.
Yes.
Trustee Cates.
Yes.
Trustee McMahon.
Yes.
Trustee Martin.
Yes.
Trustee Riley.
Yes.
Trustee Rotundo.
Yes. Yes.
We'll go back to Trustee Kane.
Yes. Apologies. I was having Zoom issues. Thank you.
The motion is carried.
Great. Thank you all very much. We are pressed for time, but I want to move us quickly to the next agenda item, which is the adaptive use of Coburn and Holmes Hall as a public-private partnership authorization. And recognizing that we are pressed for time, President Farini Monday and your team, as tightly as you can do the presentation and still give it justice, we'd appreciate.
Thank you, Chair Riley. Good morning, everyone. I'd like to turn directly to Vice President for Finance and Administration, Joanne Yastremski, and Vice President for Innovation and Economic Development, Jake Ward, who will take us through the presentation, and the rest of the team and the consultants are here as well if there are questions. So Joanne and Jake. I believe Jake is starting.
Thank you, everybody. Again, Jake Ward, Vice President for Innovation, Economic Development, University of Maine, to bring you an update on the adaptive reuse of homes in Coburn Hall. Joanne, are we starting at the beginning or are we starting at the end?
We're going to start at the beginning, Jake, and I'm just making sure. Can you see my screen okay?
I can, but you're not in display.
But not in good, yeah, not in good order here. Just 1 second. Start, Jake, and I'll work on that.
Sure thing. So again, we've been to the FFT several times to discuss this project, and we're nearing the final steps. Today, we're hoping to get your approval to move forward to a full board approval for completing the definitive agreements. Once again, this is adaptive reuse of two of our most historic buildings for a boutique hotel. The current schedule you'll see on the screen. Red bar is what the task is, and the gray bar is what's been done. There's really been a parallel process. The developer, Radnor Property Group, has been moving along with the work they need to do to be able to begin construction to get to financial close in the early 2022, first quarter 2022, so that if all things go right, we'll be constructing and completing the project before commencement in 2023. You can see that they've been pursuing all the activity they need to get to financial close. Next slide. So the terms of engagement with Radnor, we continue to negotiate the terms of the definitive agreements. That creates the agreement between Radnor Property Group and their team for a 99-year lease, ground lease for the facilities. As previously negotiated with Radnor, if Radnor opts to sell the asset at any time during that, we would have first right. The University of Maine system would have first right to purchase it from them. We have previously negotiated components in the schedule where we can request to buy them out at the years 25, 50, and 75. Radnor and the team, their equity programs are bringing $22 million to the redevelopment. That's a cost that is not borne by the university. However, they are applying for a new market tax credit. That's a federal tax credit of $1.7 million. In the event that the tax credit is not awarded, then UMaine would fill that funding gap. And then as far as UMaine providing a backstop on operating revenue, if net operating income does not meet projections, cover costs, then UMaine is going to step up and backstop that with a cap of $450,000 for the first year of operations. UMaine's guarantee on any backstop ceases to be in effect after 25 years. Next.
Jake, I think I'll go to the next slide.
Yep.
So Coburn and Holmes Hall have significant deferred maintenance. They're buildings that are vacant, as we've mentioned before, for some 10 years now, with deferred maintenance and really more than $10 million and an annual operating cost of $100,000 just to keep it heated in the wintertime. Jake mentioned we're so pleased to have someone else put the $22 million into this project, not us. But we do have an exposure of up to $2 million for the funding if the new market tax credit doesn't come through, and the backstop, as Jake mentioned, also. So that's some discussion on our risk assessment. Then I'd also like to just say a little bit more about the benefits to the university. Once again, eliminating the deferred maintenance and renovating these beautiful historic facilities into a boutique hotel facility that we all believe that we need to have on the University of Maine campus, so that we can use it for the uses that you see here, for work, for athletics, for entertainment purposes, and so forth. We will generate revenue from this operation through our dining operation, because these facilities will not have dining. We will provide that catering revenue for those services. There's a ground lease, $30,000 and increasing, and we eliminate this $100,000 annually that we're currently paying. And then we have an upside if the property does better than projected, of 15% of net operating income. So next steps, why we're asking for the FFT approval today and the board approval at the November 15th meeting. We're completing our negotiations with the developer, with Radnor, and also Maine Course Hospitality, which is the cooperation agreement. The design process is very far along. So with that, all told, why we are hoping for signing a definitive agreements and closing in the first quarter next year so that we can open the doors ahead of commencement in May 2023. So I conclude with leaving abbreviated version of the resolution, and Trustee Riley, I will turn it back over to you and to stop sharing my screen.
Thank you, Joanne. Thank you, Jake. Questions? We've seen this before and have many of our questions answered in this presentation. Questions or comments? Anybody?
Madam Chair,
Jim, as Trustee Donnelly?
thank you. I just want to compliment the creativity of the campus and finding a P3 opportunity to take these beautiful buildings that were in decay and move them back into productive use, enhance the campus, and make a long-term investment using private investment into the campus, and also maintaining the opportunity for the campus to have future ownership if it makes sense. So I just wanted to take that opportunity to compliment all those who've worked so hard to get to this point and thank them for their hard work.
Great. Well said. Thank you.
Madam
Yep.
I shared this in the executive session, but I'm sharing it here because I think people who are watching should know. As many people know, I have a lot of enthusiasm for these projects. I did work in Holmes Hall for over a decade, and it really needs this. And this is really exciting. And I wanted to share here in the public meeting that while I was at homecoming last weekend before, whatever weekend homecoming was, there was a lot of excitement about this from people who live across Maine and who return to Maine, who want to spend more time at the University of Maine, about the idea of being able to stay in these buildings on campus and what a thoughtful way it is to keep these buildings alive and part of the campus landscape. And so I'm particularly excited and glad the project continues on track in this way.
Great. And we appreciate all the work. Anybody else? Comments? We ready for the resolution? I think we are. Let me read the text of the resolution. That the Finance, Facilities, and Technology Committee approves the following resolution to be forwarded to the Board of Trustees for approval at the November 15th board meeting. That the Board of Trustees authorizes the University of Maine system acting through the University of Maine to pursue a public-private partnership through a 99-year ground lease and definitive agreement with Radnor Property Group, LLC, for the building redevelopment of Coburn Hall and Holmes Hall, a 24,800 square foot addition to Holmes Hall, and to expend the amount of up to $2 million for the development and university-incurred consulting and legal expenses for the project. All final terms and conditions shall be subject to review and approval by General Counsel and the University Treasurer. If there are no questions, do I have a motion?
So moved.
Moved by Trustee Kane, seconded by Trustee Rotundo. Any further questions or comments? Seeing none, Ellen, will you call the roll?
Certainly. Trustee Kane,
Yes.
Trustee Doak,
Yes.
Trustee Donnelly,
Yes.
Trustee Irwin,
Yes.
Trustee Gardner,
Yes.
Trustee Cates,
Yes.
Trustee McMahon,
Yes.
Trustee Martin,
Yes.
Trustee Riley,
Yes.
Trustee Rotundo.
Yes.
The motion is carried.
Thank you, and thank you, President Freeney-Mundy and your team for a very expedited and very precise presentation. It was really helpful to get us back on time and all the great work. Thank you.
Fantastic team, but thank you all. FFT members were very appreciative about this ability to move forward.
We look forward to staying in those buildings when they're ready. Okay, let's move on then to the Talent Research and Innovation for Maine, Tri-Maine, the Maine Jobs and Recovery Program. And again, President Freeney-Mundy.
And Vice Chancellor Lowe as well. We have a slide deck for you that I believe Ryan's going to show from his side, right?
I am.
Okay, so while that's coming up, this is just a very quick information item update on the work that we are doing in the Maine Jobs and Recovery Plan, and I'll turn it to Ryan.
Excellent, thank you. So just wanted to provide again a little bit of background, and I'll cover these first couple of slides, and then we'll pass it back to the president. So again, as a reminder, these are funds as part of the governor's plan to invest the 1.1 billion that is coming to the state in the American Rescue Plan relief, part of legislation passed last year. You can see on the right side of the slide the $35 million allocation coming into the state. Again, it's important that we line these projects up with the as the funding comes in, although we are looking at cash flow opportunities and how we manage that. Again, the focus for the projects, as you would expect, is on recovery from pandemic, long-term economic growth and infrastructure investments. And again, as I noted, 35 million coming to the university. Some of the key considerations in selecting projects, again, looking for consistency with congressional intent. We want proposals that, as best we can, align with the state's 10-year economic plan, that are in alignment with UMS strategic priorities, with unified accreditation, our R&D plan, and just as importantly, we want, when the opportunity is right, the ability to leverage other investments, and the generous donation from the Alphons for the UMS Transforms is the perfect example of that. If we can leverage some of these additional dollars with those dollars and get a greater return on investment for Maine, for our students, that's exactly the type of project that we are looking for. Here is kind of a preliminary list of how that 35 million breaks out by project. We have been in conversations led by the president. Want to acknowledge the fabulous work that Sam Warren has done with us in this space as well. And this gives you kind of a general flavor of the type of projects that have been submitted that we feel kind of meet all that criteria that we've talked about on the last few pages. We've been working with the campuses on business cases and tightening those up and getting ready for our submission to the state. And I think that's a perfect opportunity for me to send this over to Joan.
Thanks, Ryan. So the state has been working to get interpretation in place of the Treasury draft guidance on this, so that we're certain we're in compliance with how these dollars would be used as they go out. So the process is that later this week, every project here has been working on a business case, and those will all be submitted centrally by us to the state, where there will be a review at that level then of alignment and eligibility for each of these projects. And they need to make a specific argument for how particular public health or economic impacts of the pandemic are necessitating really this work, and how their work will directly address them, how it's allowable. So we're very attentive to the federal guidance, as well as alignment with governor's economic recovery committee and 10-year plan recommendations. There will be a fair bit of monitoring of these projects. So we have to have very precise milestones, timing considerations, clarity about who the partners are. And as Ryan has just said, we're looking to align with the Alphon investment and to be very attentive to when there will be necessary BOT action and FFT or ASA review going into these projects. I also wanted to note on the slide that we just left that for each of the projects, if we can just go back, you see that number in parentheses. We've actually asked that each project specify at least a portion of the funds that would come to them to be very specifically focused on talent development, workforce development, opportunities for students, and connected to the facilities requests that might be aligned with them here, so that we're sure that we are in each of these new kind of expanded infrastructure areas, we are really building in intentional efforts to prepare students who are undergraduates and graduate students at our universities to be contributors to the state and beyond. So then going back quickly, we're working on the business cases now. We've had them, they've come in, and we've gotten back to the developers. Sam Warren has been phenomenal, as has Jason Charland. So those business cases are being reviewed, rewritten, and will be submitted tomorrow or the next day. Next one, please. In addition, if you added those numbers up, I think you will find that we came to about 31 million. We are setting aside at this point at least $4 million for a small campus initiative. And as you know, we have a number of these. We have an MEIF small campus initiative, RRF funding, we have some small campus emphasis. So these campuses are eligible, and we also called for their first draft proposals, although those won't be submitted directly to the state. There will be a down select process in the system. But we do need to know the general ideas that are being considered so that there can be a description of this piece of our grant when we go to the state with our plans this week. So those are coming in, a lot of great ideas coming in from across the system. Next slide, please. And again, we've talked about this. This is the gist of the argument that we're seeing in a majority of these. So we're working with our partners across the system to be sure that we can get through the part 1 review with the state or be prepared to adjust so that then when we go into the part 2 review, we are relatively assured of seeing these dollars come in this direction. But it's not all done yet. There are several more steps. So we wanted you to be aware that this is going on. Several items over time would of course come to FFT and also to ASA. And with that, I think we're open to any questions you may have.
Wonderful. Thank you both. Exciting opportunities. Questions or comments? I guess it was very clear. Anybody?
We're too fast.
Great. No, it's terrific. Thank you very, very much. It's very exciting. We look forward to hearing more about what plays out. Great. With that, let us move on then to David Demers, the Chief Information Officer, who'll bring us a review of IT projects with a value of $250,000 or greater. Dave?
Thank you, Chair. Thank you, Chair Riley. Good morning, everyone. I'm going to go through our usual report. It's going to be somewhat brief. And if I can get a nod or a thumbs up that my screen is showing. Good. Thank you. So I believe you all have this. I'm going to walk through the first page just in a stepwise fashion, just to point out that we are winding down on some of the major investments that this committee has received reports on over the past several years. These include the bond-funded Classrooms for the Future and the UMS Wireless Infrastructure projects. For the Classrooms for the Future project, we are winding that down. Right now, we're at about 99% complete. We're doing the final assessments of those rooms. I had hoped to be able to report on the full assessment report at this meeting, but we were a bit delayed with getting some of that work completed. So definitely by the time we meet next, we will be closing this project and I'll be able to deliver the full report. In terms of the web conferencing upgrades, you'll recall this is a $2.56 million investment the board approved last summer to allow us to do some upgrades in facilities to promote high flex and remote learning opportunities. This was received very well by the faculty across the system. We are also winding this one down, so I'm hoping to be able to combine those room assessment reports together when we close both of these projects out during the next meeting. Similar vein, our voice over IP final steps for the campuses that we are still cutting over onto the voice over IP platform are underway. Farmington and Presque Isle are basically complete at this point. We are still rolling out the deployment of voice over IP handsets at the University of Southern Maine. We've had some delayed supply constraints that have gotten in the way of getting some orders in for the USM project, but we're still kicking it off and tracking that as closely as we can to get that completed, hopefully in December. And by that point, I'm hoping we'll be able to close this project out as well. Last one on this list is the UMS Wireless Infrastructure. This was the $13.2 million bond-funded initiative to help us to upgrade our standards, our minimum standards for wireless connectivity across the system. This work is basically complete. We have a few final fiber installations to be done at USM. Again, supply chain constraints have gotten in the way of getting fiber delivered. We are hoping to be able to get that connected and wrap this project up as well. And we'll be hearing more about that at a later date in terms of the maintenance of this investment as we go forward. So with that, I did want to turn our attention real quickly to two major initiatives that one's winding down while one is ramping up. The first one is the one that's ramping up. You've heard about this previously. We've committed $16.8 million for the repaving Main Street initiative. We're just now getting our, I guess, some momentum behind this. I'm going to jump to the next slide. You'll recall that this initiative is really designed for us to take a holistic look at our ERP platform, the PeopleSoft environment, and really think about it, how it can support our unified accreditation efforts and promote more consistency and access to academic programming for all of our students enrolled on all of our campuses. So this is a prime opportunity to really create some efficiencies for our functional offices and improve functionality for our students. We have already completed the review sessions with our functional area groups. We've reviewed the opportunities that were identified during the ERP assessment work with Huron. We've been able to prioritize those opportunities, and now we're comparing what those priorities are to delivered functionality in the Oracle suite. We've already scheduled functional demos and completed a functional demo of the Oracle HR platform or the HR environment. Feedback was very positive on that. And we are moving forward with identifying an implementation partner to start the work that's going to be involved with getting us to move over onto that platform. Under the upcoming section, those were, at the time we produced these slides, these were on the roadmap, but these have actually been completed. So I put those in bold and asterisk them for you. So in the couple weeks since this was submitted, we did do the Oracle demo for the financial aid solution. The finance and budget one is scheduled, and I think that's happening within the next week or so. We have kicked off our RFQ or RFP for an implementation partner that has been published. It's going to be, we've accelerated the timeline so that we can have that implementation partner contract hopefully awarded before the holidays so that we can begin the work in earnest to begin the planning process and migration and all of the work that's going to be involved with pulling this together. We've completed the budget planning and setup, and everything is on track for us to kick this off and start to gain some real traction and movement as soon as we turn the calendar to the new year. The one that's winding down, it sort of dovetails, and this is the Main Street user interface enhancements. I've reported on this previously. Right now, I'm reporting we're 99% complete. We're winding it down because we've launched the new Main Street experience for all of our students. We've been able to get through a couple of technical applications of some point releases that coincide with the Oracle regulatory updates in the Campus Solutions environment. There were, we're learning how to handle and balance this new interface with the Oracle updates, but the team has been very, very responsive and successful in overcoming any glitches that we've seen along the way. So far, again, student feedback on this environment has been overwhelmingly positive. Anytime you change an environment for some of our more seasoned professionals, however, in advising and student records, they're still learning how to navigate this new environment, but at the end of the day, we still believe this mobile-friendly, accessible tool, which puts the information at the fingertips of the students, is a highly beneficial environment, and we expect to maintain this as we go through the Repaving Main Street initiative. So this is one of the key things we really wanted to focus on, is usability and access to information in a timely fashion. This tool paves the way for us to take full advantage of the improvements that we'll gain from the Repaving Main Street initiative and turn those benefits over to the students as they're engaging with us during their academic career. So with that, I'm happy to take any questions.
Wonderful, thank you. A lot of work presented in very precise order. Questions, comments for Dave? Anybody? And thank you for once again being our hero and getting us back on schedule.
You're very welcome.
Great. Okay. Thank you very much. Let's move on. Chip Gavin could not be with us today, but we're really pleased that Carolyn McDonough, the Director of Capital Planning and Project Management, is to take us through the capital project report and the bond projects update.
Thank you, Chair Riley. Good morning, everyone. And I shared the capital project status report in the board materials, and I just point out a couple of items regarding the new format of our our project report. We do have a highlighted section, or any project that's got a highlight on it is a P3 type project. We do currently still have just one, which is the Maine Energy Center project listed on there. But based on today's meeting, we'll probably have another one soon. I think the Maine Adaptive Reuse Project will be on there next time, and that will be highlighted as a P3 project. The spreadsheet also includes a separate list of projects that are related to the Harold Alphon Foundation, and there's been no change to that section of the list this time around. Another highlight I wanted to make regarding the section on COVID-19 impacts and capital construction is just a reminder or a reflection that that continues, in particular, the material shortages and labor shortages are an issue we're seeing across all of our projects. We are still holding steady on our timelines right now on the current projects under construction, and we are working very closely with the contractors and designers on projects that are in design or with a construction manager at risk on them. And so I'm not raising a red flag. It's definitely yellow and orange right now. Just a warning. That is still out there. We're still dealing with it, but no issues to report as of this time. On the bond project report, a reminder, this report is specifically a list of projects related to the 2018 state bond funded work that we're doing, and that continues. We've got quite a few projects going on, and I just note at the end, as a project is completed, we don't remove it from the list, but we put it down at the bottom of the list in a separate section called complete. And that's reflecting 13 complete. I expect another 7 or so will come off in the coming months as they are completed as well. So we're working diligently on that. Other updates, in particular of note, is the P3 initiative that Presque Isle and Farmington reported back in March, I believe it was. And just an update that Farmington continues to review the potential financing opportunities for that project, different ways of doing that. And Presque Isle has taken a step back and is reconsidering right now and is removing themselves from that P3. We may provide more information at the next board meeting on that. And that's all I have for highlights. I'd be happy to take any questions on that or any of the other materials.
Wonderful. Thank you, Carolyn. We all had the reports in our material. Questions? Jump in if I can't see you. Anybody have any questions? All right. Thank you, Carolyn. We're actually a little early thanks to your hard work, all of you. Thank you very much. The next item is the University of Maine System Borrowing Authority. I asked Ryan if we could put this on the agenda as a beginning conversation so that we can think through, certainly we're in the midst of a strategic planning process, which will inform capital expenditures, but to sort of address two questions as we go forward. One is sort of how does borrowing support the priorities, our priorities, particularly the Gordian priorities. And second is how do we finance the repayment of bonds, given that some of those financing mechanisms that would repay a bond for a new initiative are also dollars that could fill a budget hole. And so the challenge here is to make these decisions thoughtfully. And I thought it was worthy of a little presentation to get at least a sense of all the borrowing and where we are. Brian?
Okay, well, thank you, Madam Chair. couldn't have picked a better day to do this, given that we've got so many different projects being funded from multiple revenue streams. And so I think it probably, as you noted, makes sense for us to take a step back and just talk a little bit about borrowing and the different mechanisms we do that. We have two presentations to close out today, one on borrowing authority and one on OPEB. Tracy and I did rock, paper, scissors, and I got borrowing authority and she's got OPEB, but I'll certainly rely on her input as we go along if there are things that that she wants to add or questions that the committee has for her as we kind of go through this. So let me share my screen and we'll jump right into this. So again, as we were just talking about, we've got a lot of facilities activity going on, certainly over the past year, and even more planned for the next few years at least. We have construction projects that are being funded by operating dollars, by state general obligation bonds, from university debt service appropriations, from fundraising, and from university revenue bonds. And in some cases, and in fact, a lot of the cases, it's a combination of those multiple funding sources all coming together. So in discussing these kind of upcoming projects that are going to be in front of the committee with the chair, again, we thought it might make some sense to provide a little background on the tools that we have available to finance these capital projects, as well as taking a look at our overall debt cap and how we manage that internally. I did add a few slides at the beginning of the presentation, just for context, that are not actually part of your materials. It was kind of a last minute addition after I reviewed this with the chair. We will update the online materials so that you can have these. But again, these first few slides are really just to provide a little bit of context when we dive into the meat of the presentation. So again, as I noted in my opening comments, there are several different kind of vehicles that we use for capital project financing, and some of them are we are interchangeable. So sometimes we use state debt service, or we use funds that we have raised from donors to support a revenue bond. And so we do mix and match a little bit here, but wanted to at least make sure that we all have the basic understanding of what we mean when we talk about some of these terms. So let me just start with revenue bonds, which is what we frequently talk about. They are a type of municipal bond, as are several of the other ones that we'll talk about. They are always subject to BOT approval. As you would expect, the system creates an obligation to pay when we issue revenue bonds. We guarantee repayment of those, as you would expect, implied right in the name, from revenue. It is often linked to the project, and so the perfect example is a dorm financed by students who are living in that dorm. But again, it could be it could be donor funds that have come in on and we want to kickstart that project, and so we'll use revenue bonds to move forward. And again, as we note there, various funding streams can be used to pay that debt service. I'm trying to include an example of each of the projects along the way. And so here we'll note the UMF Central Energy plant and project there that was funded by revenue bonds several years ago. We also have state general obligation bonds. I think generally everyone here is familiar with those. Many of you have been involved at the ground level with approving those bonds. Again, they are a type of municipal bond. These are bonds, as you know, that go to voters often in November or June. These are proposals where the state has the obligation to pay. So the state sets aside somewhere north of $100 million annually to pay debt service on bonds. So these are ones, again, where the state is paying that and not necessarily the university system. They're secured by a pledge of legally available resources, including tax revenues. I think everyone is familiar with these. In the UMF Welcome Center, we've talked about recently at the last couple of meetings as a perfect example of how we've put those general obligation bonds to work. touch on just a couple of more. We do issue bond anticipation notes. So this is a short-term debt where we create an obligation to pay on the part of UMS. The principal we typically repay with future bond revenue. So this is this, you might imagine, is ones where we want to kind of kickstart the project. We know the bond fund is coming, but often it reduces our own financing costs if we can go forward with a short-term bond anticipation note. We pay interest monthly, and as I'll note in just a few minutes on why, it is exempt from the UMS debt cap. The USM residential facility, which we've touched on in some of the conversations this morning, again, is a perfect example of that, getting that project jump-started. We also have public-private partnerships. So again, we've talked about these extensively at the committee's meeting today. I'll just note there are many different flavors of P3s, I think, as the chancellor may have said in one of the open forums yesterday. Any version that you could imagine, there is a P3 out there that looks similar to that. And so, again, we note here some of the structures are self-financed. We can affiliate with 501c3s, with national foundations, with private equity partners. Typically, what we're looking at when we talk about P3s, and we've talked about them a lot, and so we started talking about them at the USM residence hall. We talked about it earlier in this meeting with the project at Orono. Carolyn just referenced the P3 conversations that we've been having with Presque Isle and with Farmington. Again, different flavors of those, and a lot of it at the end of the day comes down to kind of the risk reward transfer. And so, if you'll recall the discussions we had about the USM project, we felt more comfortable that that was a project that we could meet kind of our occupancy goals, and it felt like it made more sense for UMS to take some of that risk and potentially realize the upside. There were other projects like the one that the board just approved in Orono, where it makes more sense to transfer that risk over to a third party. And again, as I noted, there's really no one definition of that. And again, a great example of that is the project you approved just earlier in the meeting, the Holmes Coburn Hall revitalization. And let me just wrap up this part of the presentation with kind of the other category. There are other vehicles out there that we use, master lease financing around some of these energy projects that take place on campuses, gifts, internal loans, and then it's not unusual to use operating funds to jumpstart a project as well. Here we'll highlight the Engineering, Education, and Design Center at the University of Maine, which checked that the gift box and a couple of other ones as well. So many different kind of vehicles that we have out there. Now I'll transition into the slides that you do have in front of you. So a little bit of history of UMS borrowing authority, and a big thanks to Sam Warren for doing a lot of the research here. We go back to 1987 when the legislature established a borrowing authority for the University of Maine system. 2 years later, they established the first cap. That was an $18 million cap. The cap increased by $9 million in 1991, as you can see in the notes, to really allow the system to acquire the Lewiston Auburn College facility as part of the University of Southern Maine. And then from 97 to 2005, the cap kind of increased steadily in regular intervals. Our debt went up, as you would expect. You can see that in the shaded part of the pie chart here. But did want to note, as you can see very well for yourself here, that just because the cap goes up didn't necessarily mean that we went out and maxed out the credit card, if you will. There's a lot of, like your home bills, there's a lot more that goes into this than just having the capacity to spend more. You have to be able to pay it back as well. And so, even though, I mean, you could argue and argue correctly probably that between 97 and up to 2018, we probably should have been investing more in our facilities. We probably should have been taking advantage of the revenue bonding, of the capacity that we had to be making upgrades at some of our facilities and certainly our residential facilities. The other side of that coin is, again, you have to be able to pay the debt service. And we also know that's the same window where we struggled with increases in state appropriation. We were largely held flat. We froze tuition in more than half of those years in that window. And so at the end of the day, even though we had the capacity, we weren't always able to issue the debt as it went up. In 2019, as we really jump-started a lot of these conversations that are culminating with all of the projects that we're bringing to this committee recently and the ones that we are planning going forward, we started to look forward and see that we could potentially have issues if we continue to have a cap that was at 220 million. So we worked with the chancellor, we worked with Sam Warren and our legislative friends and executive branch friends, and put in a proposal to increase our cap from 220 million up to $350 million. We were able to receive strong bipartisan support for that initiative, to which we were, as you would imagine, incredibly grateful for that support. But just 2 years later, at the time we were kind of processing the Transforms gift from the Alfond Foundation. We started thinking about what were the best ways to put that money to work as soon as possible. And I think, as this committee is aware, those incredibly generous dollars that are coming in, they come in on a schedule over nearly a decade. And so what we wanted the ability to do was to take that future revenue stream and put those dollars to work now to get those projects started. And so we went back to the legislature last year and made the argument that we don't necessarily need the cap itself to go up, but we do think there are things within that cap, as it was defined at that point in time, that we really felt shouldn't necessarily be in there. And so, if the cap was meant to control the amount of borrowing that the system was doing, when a third party was making those debt service payments for us, whether it was the state of Maine or whether it was Alfond revenue, we wanted to make the argument, and we're successful in making that argument, that portion shouldn't necessarily count against the cap, because we want to put those dollars, those Alfond dollars, to use sooner. It shouldn't prevent us from building a residential facility, for instance, for our students, if we had the resources and the revenue to pay that off. And so we made that argument to the legislature last year. This is the language that was included in the governor's budget and ultimately approved. And as you can see, specifically here, it excludes from the cap those places where a third party, whether that is a foundation, a P3, or a donor, is paying that debt service. We were also able to include language to exempt capital lease obligations, interim financing for capital projects, borrowing of that nature. So again, incredibly grateful for the support we got from the legislative and executive branches that allowed us to put some of these projects in front of you. Again, you can see the specific language here. This notes overall long-term debt at $165 million system-wide. So if I just back up just a second, again, if you look at the 2021 number here, you'll see the same 165 million. About 43 million of that now can be excluded from the debt cap. So let me get us back to that same 165 million. Here you can see how that debt breaks out by campus. We don't manage the cap necessarily by campus, but certainly thought it was important information to share with the committee. Those of you that have been around for a while will know that typically anything we do system-wide, whatever it is, 50% of it will roughly be at Orono, 25% of it will roughly be at USM. In this case, the outstanding obligations here for those two campuses are about 130 million, a little bit more than that, which is higher than the typical 75 to 80% you would see from those two campuses. But if you think about it, it makes sense. Typically, when we are going to go out for a revenue bond or debt financing, it's going to be for a really large project, and typically those have been at Orono or at any of the USM campuses. So no surprise that we tilt a little bit more towards the large campuses in this case, but we do maintain capacity in a way that continues to allow us to finance projects at smaller campuses if we feel confident we have the revenue stream to pay that back. So I want to talk a little bit here about how we manage that cap. And so again, the last chart showed you, where we are overall in relation to that cap. If you exclude those projects that are exempt, we're only using roughly a third of the available capacity we have now. Several of the projects that we have talked about recently, including ones, that were on your agenda even this morning, like the USM parking garage, we have built into our debt plans. And so you'll start to see those moving forward. Other projects like the Maine Energy Center, for instance, a huge portion of that project will not be subject to the debt cap. Important to note, we still do all of the appropriate due diligence on our end, whether something is impacted by the legislative cap or not. We still need to feel comfortable internally that a campus can repay those debts. These are often projects where we go and make presentations to rating agencies, and so they're obviously interested in that same information. And so whether a project counts towards the cap or not doesn't necessarily change the amount of work that we do on our side. Two other kind of ways that we build these kind of projects in. One is the approved projects that we just talked about. Also projects that are in the planning phase, and so particularly relevant is the USM Performing Arts Center. We've talked about that recently. The Gem Lab at the University of Maine, the Residence Hall at Farmington that Carolyn referenced earlier. Those ones that are kind of in that planning phase, if you will, months, even years before those projects will ever hint at being on an FFT agenda, we have already had conversations with the campus team, with Carolyn and others, to make sure that we build those into kind of our out year projections, to make sure that we just suddenly don't wake up one morning and realize, oh, we've maxed out our credit card. How are we going to fund that next project? And it's important to note as well, we have projects that again are probably as much as a year or two away from coming to this committee, that we also have as part of our planning process. And so this committee has heard, I think at least on one occasion, about the rolling master plan at the University of Maine, for instance. There are multiple projects as part of that rolling master plan that would rely on system borrowing. And so the science building has been kind of on the in the queue for a number of years. The replacement of that facility at the University of Maine. Tracy and I absolutely have that project on our radar. It's part of what we look at long term when we start making projections around the cap. So that gets us through the project. If you're okay, Madam Chair, I'd like to pause just for a second, see if Tracy wants to clean up anything I may have messed up or anything that I didn't emphasize that she would emphasize. And then after that, happy to answer any questions.
Thanks, Ryan. Tracy?
Thank you. Ryan, you did a great job. The only one piece of information I'd add, just because it's relevant to the availability of debt cap, is that over the next 5 years, $56 million in principal will be paid, so providing some flexibility in that cap number that you saw earlier.
Great point.
Great, thank you both. Open forum. Obviously, this is an issue of great importance to this committee, given that it sometimes feels ad hoc as we see these proposals and to try to figure it in a bigger context. Questions, comments?
Madam Chair, it's Emily. I would just say that I think it's really helpful to go through this stuff, particularly we have so many newer members of this committee, and it's helpful to put in context over time. I remember I was a co-sponsor of the bill to raise the cap in 2005, and I remember at the time going, I need you to explain to me how this works before I sign this bill. And it's interesting. It's very thoughtful. It's complex, but I just want to say thank you, because I think it's very helpful for us to kind of review how it all works on a regular basis, so that we can ask better questions and better assess the projects as they come before us.
Great, thank you.
I don't have a question, but I want to thank you because you just answered a lot of questions that I might have had preemptively.
Great. Trustee Irwin?
Yes, just a quick question. I'm trying to relate the kind of how we manage our bonding capacity in relation to risk management. And it may be that's not an issue, because obviously we have insurance. But if, for example, we had some sort of a catastrophic loss on a campus, they had to replace a building, and insurance wasn't sufficient to cover the cost. Do we have any sort of reserve that we keep in our bonding capacity to deal with that kind of an eventuality, or how would we deal with a loss that we can't cover fully with insurance that we have to replace?
Yeah, really good question. I'm not sure if Tracy has any thoughts on that. Certainly, we do have reserves. We always try to make sure we have plenty of capacity. I don't know that we planned out necessarily for that type of event, but certainly can loop back with risk and with Chip, and maybe come back and talk about that a little bit more. But let me see if there's anything Tracy wants to add in there.
No, I was hoping Gretchen was on the call to talk about whatever our exposure is there, but she'll be joining us in audit if you happen to be around then, but we can follow up on that.
Yeah, it's a great question. We'll absolutely follow up at that at the next meeting.
All right, thanks.
Yep.
Other questions? And I'm not sure I can see everyone, but anybody? Questions, comments? Okay, thank you very much.
I'm sorry, I had one.
Sorry, Trustee Kate.
Thank you. Just raised my hand. Ryan, the bonds that the university issues, as opposed to the state ones, are those level payments over X years, and how many years are they usually, or are they level premium payments, or how does that work?
Yeah, well, I'm going to warn Tracy, I'm going to kick to her in about 15 seconds here, because that's we do have flexibility. It depends on the type of projects. And so, if we issue a revenue bond, for instance, way back when we did the Memorial Gym, we got funds from the legislature for that, or when we've done some IT or some demo projects, it's not uncommon that we would line that up with the length of the money that's coming in from the state. So we might do a 10-year revenue bond in that case. We'll look at something different if it's like the USM residential hall, where you're talking about a project that is approaching 9 figures, and so we wouldn't necessarily try to jam that into a 10-year repayment. But let me defer to Tracy.
Sure. We usually try to match the life of the debt to the life of the project. But we have great flexibility around the annual amounts. Usually they're equal, but let's just say you have a project you're building now and you don't have that revenue stream for a number of years out. You can defer capitalized interest and defer payments and be flexible that way. But most generally they are even payments spread out over the term. But and also just mention, obviously we have revenue bonds and we have multiple projects throughout the organization, and we could have in any one year for the university, those payments will be different collectively, but they're all broken down into the individual projects.
Thanks.
I think, okay. Trustee Rotundo.
Thank you. I have a question as a new board member, and that's how the board evaluates borrowing for new projects and where they fall into our list of priorities. So can somebody speak to that?
I think that's why we wanted to have this presentation.
Yeah,
I think
yes, but I'm just wondering in terms of thinking of board members and what's happened in the past and how people have made these decisions or thought about that.
And against what criteria?
And against what criteria, right, in terms of...
Maybe an area where we want to do more work, interim to the strategic plan. But does anybody have a history, any of our long-term members? I almost said older and I didn't mean that.
Yeah.
The long-term members have any history to share?
Madam Chair, while they're thinking of all the great things they're going to offer, can I just mention from our side, it's driven a lot by campus master plans, by the 10-year plan that we put in front, the 1, 5, and 10-year capital plans that we put in front of the committee. When we start planning those out, we often speculate what we think the revenue source will be for that project. But a lot of times, as you would imagine, it's 5 years off. And so when we're thinking about how we finance a future science building, for instance, at the University of Maine, it would be ideal if we got a state general obligation bond. But if that doesn't happen, then what's our backup plan? And so we try to help the committee help inform some of the conversations by how they fit into those different pieces. And then the reality is, certainly for even a lot of the longtime members, is quite frankly, we haven't been doing a lot of projects. It's why our deferred maintenance is so large. And as you saw in the presentation today, it's the directive from the chancellor to think outside the box a little bit more. So if this was 5 years ago and the only thing we were praying for was general obligation bonds, then we'd be at the point now where we'd say, well, it doesn't look like anything's in the queue and it's an election year, so we're probably not going to get anything. So let's talk again in 2 years. We've tried to use things like P3s and some of these other creative financing pieces to put more projects in front of you. So that has also helped accelerate these type of conversations, which is why I thought this was such a great topic for discussion.
Chancellor?
Yeah, what we will do, although I've already looked at this, is take other similar institutions, particularly in New England, and try to give you a look at what those collections of those individual universities or systems of universities as they may exist in the various states, and give you some feedback on that. Having said that, we have underinvested for the better part of 40 years. And are awakening to the challenge. I would also say that philanthropy has, I think, historically played a role. That is one aspect of how some investment decisions or early decisions. And the reality is right now we're riding largely on things that are 5 and 6 years old in the discussion level, that are now coming to fruition, some with philanthropy being a driver. And then final point, obviously, a lot of this is turned on its head when we qualify for Alphon money that is directed at our infrastructure, most particularly and most probably and probably first to construction may in fact be Division I athletics at the University of Maine, where the charge is to raise $20 million to access $90 million. Whether any portion of that would also carry bonding obligations, or, for instance, impacts of the state of certain buildings causing us to react more quickly to one need versus another. But I think it might be helpful if we give background information with respect to other New England-based institutions.
I wondered too if we might, when we get the annual Gordian report, spend a little more time on that and do it. Not that that's the Bible, but it's a great indicator. Do a little time comparing the master plans from the campuses and the Gordian report and getting a sense of where we're headed. Might make a useful discussion. Trustee Donnelly.
Yes, Trustee Riley, the thought process, I think we've used the Sightlines or Gordian report for a number of years to kind of help move forward. And so there was, when I joined the board, the thought process was no new square footage was coming on line without old square footage that was under or not utilized being retired. So not to exasperate the issue. The kind of test I've applied when looking at these things, I've gone through, is there a safety or a workplace safety issue that brings a project up to the front of the line? Is it addressing a facility on a campus that needs to be addressed and is solving for a problem? Or is it enhancing the educational experience on those campuses? And so when we do that, we also try to look at, or I try to look at, is what's the financial feasibility that comes, and ask a lot of questions about how's it funded, and if it's all done because if we build the building, then they will come, then push for just how realistic are those new projections for new student revenue actually funding that, and try to dig into, are we enhancing the UMaine system and improving our deferred maintenance on the campuses, or are we improving it? And I think when I look at all the projects that are going on now and the funding sources, I think we've applied some of those and a lot of those litmus tests. I don't think there is a one formula fits all for our judgment, but I like the way we're moving towards boiling down to some hurdles before a project's put before the board to make sure that they're able to clear those hurdles before they get here. And Vice Chancellor Lowe has and the Chancellor have done a great job of applying some of those hurdles before they get here. And so the early questions are here, and then we're refining some of the proposals and pushing for more detail rather than starting at ground zero. So I would say that from an older trustee, but not the oldest trustee. That's my perspective and experience.
Thank you. It's an interesting point for, as we think more about this, is that a revenue bond that's paid for by increased enrollment means that the increased enrollment is a goal, but it's a goal that has to pay off a revenue bond, as opposed to a goal for increased tuition, increased enrollment that will help the budget. So I think that's where we always have a balancing act. But I concur that the Chancellor and Vice Chancellor are making this top priority, long overdue.
And just another thought while you were saying that was, we've done things with our carbon footprint that may not hit any of the things I talked about, but also hits another goal of the university system. And so when we've done improvement in our heating plants and the way we utilize different powering sources, that's outside of the criteria I just said, but it's not less important.
Good point. Good point. Okay, I think this is a conversation we'll continue to have. We have the Gordian study that will always bring us back to it, and all the efforts underway to gear up our campuses. So unless there's anything more, why don't we move on to Opeb? Vice Chancellor Lowe.
And I'm going to defer to Tracy on this presentation.
Okay, thank you. I'll share my screen. I'll attempt to.
You get it.
Am I doing that?
Yes.
Okay.
Well.
Oh. It's not doing that for me, right? Are you seeing you're probably seeing the slide?
We're seeing both your slide but I think it works.
Okay, apologies, it worked last night. So today I will provide a brief history of Opeb, including trust funding and related financial results for fiscal year 21. And part of the thing prompting this is the significant impact to our financials related to Opeb. And with new trustees, we thought it was valuable to go back and look at some of the history and further explain this area. So what is Opeb? It is the post-employment benefits other than pensions, and for the university, that is primarily retiree health. It applies to all public entities, including states, towns and cities, K-12, and public universities. Over the years, GASB, which is the Governmental Accounting Standards Board, has made significant accounting and financial reporting changes regarding these types of employer commitments. And so why did GASB make these changes? And it was to provide a complete, reliable, decision-useful financial reporting for the costs and obligations for these benefits for both the financial statement users and in general for decision makers. Such standards have revealed the extraordinary financial commitment that entities have to their retirees, with Opeb liabilities on a national level exceeding over $1 trillion and being the third largest liability behind debt and pensions, or at least it was in 2019. Let's see, on the slide. Back on October 28th, 2008, the university established an Opeb trust. And this is a separate entity with assets that are legally protected from creditors of the university and of the plan administrator, which is Mellon Bank. The university has made contributions to this trust annually, which are irrevocable and dedicated to the funding of these Opeb costs. Establishing this trust also had the benefit that the university was able to include the funded amounts in the federal benefit rate used to charge grants and contracts. I'm going to oversimplify and condense years of accounting and financial reporting in this area. The trust that I just mentioned was prompted by the implementation of new accounting and reporting standards, GASB 45, back in fiscal year 2008. Prior to this standard, entities reported Opeb expenses and liabilities according to what they were paying out for retirees and not the benefit that employees were earning throughout their service years with an organization. GASB 45, employers were required to adopt accrual accounting for Opeb plans. Using an actuarial valuation, entities would be able to essentially assign costs to the employer's years of service rather than when the benefits are paid out to those retirees. To prepare for this extraordinary change, the university needed to first understand the full impact of its commitment, and therefore engaged its actuary to value estimated total liability, which came in at a whopping and unaffordable $330 million back in 2008. A retiree health plan task force was established and explored options, working with its actuary to bring down this obligation, ultimately bringing forward new retiree health eligibility recommendations with age and service requirements, which were approved and then implemented. The result being, we brought the estimated full liability down from $330 million to $120 million. It's worth noting, however, that GASB only required a portion of that liability to be brought onto the face of the financial statements, with the full liability disclosed in the notes. At the same time the work was done, the university established the trust that I had mentioned. Fast forward a decade to fiscal year 18, and the university implemented GASB 75, another new accounting and reporting standard for Opeb with retroactive application, resulting in the full liability being brought onto the face of the financials this time, with a restatement of fiscal year 17 unrestricted net position down by nearly $90 million. Today, the financial picture is much brighter. I would direct your attention to the red middle line, which represents the net unfunded liability, meaning the amount by which the liability exceeded the trust assets at any given time in this history. With the university annually contributing required contributions to the trust over time, plan assets, represented by the green line, grew, outpacing and in fiscal year 21 surpassing the total liabilities represented by the blue line. The result is a fully funded position in the trust balance of $180 million, a funded status of 111%, and an $18 million net OPEB asset at the end of fiscal 21. Two major drivers for this were the 27% investment return on trust assets, which yielded an additional $37 million for the trust. Adding to that is the Medicare exchange, the second major driver, as a plan option for retiree health, in addition to the fully insured Medicare Advantage plan. So it's worth providing some cautionary words regarding the funding level and the risk of significant volatility. And here's why. The actuarial valuation includes use of methods and assumptions that could change, like medical trend, inflation, levels of dependent participation, mortality, and turnover rates, to name a few. But most significantly are the impacts of the long-term expected rates of return and the discount rates used to calculate the liabilities. For example, a 1% decrease in the discount rate used to value the liabilities, going from the current 7.25% down to 6.25%, would bring the $18 million net asset to $1.8 million liability. In addition, as the Medicare exchange option is new, the valuation makes assumptions about rates of participation in each plan and the health reimbursement account coverage levels. And we haven't had the history to prove out what that experience will actually be. This slide shows the components of what is typically called total OPEB expense. However, as you can see here, for fiscal 21, it actually concluded with an income or a negative expense of $46 million. If you were looking at our annual financial report, you would see this as a reduction in operating expense in the institutional support line. The benefit change on this slide is the Aeon Medicare exchange, adopted by approximately 40% of participants in 2021. Allow me to just pause here for a moment to acknowledge how very difficult this implementation was for retirees, for trustees, and for many others. And in that vein, Chair Riley, you asked me to provide a brief update on retiree satisfaction. I reached out to Aeon for current numbers, and they reported that based on recent surveys, university retirees were 90% satisfied with their benefits advisor and 93% satisfied with their customer service associate who assisted them on inbound calls. And with open enrollment underway, we will be receiving more updates from Aeon, and we'll be back to you with that. On this last slide, it depicts the comparative results that I've already reviewed for the year ended fiscal 20 and 21. The overfunded status and resulting OPEB income enabled the university to restore 49 million of the 83 million in unrestricted net position remaining from the 2018 implementation of GASB 75. With one final note, I would mention that Linda Bourneville with KMS Actuaries will be presenting on the work she does and the fiscal 21 results during this afternoon's audit committee, which if you should wish to hear more, certainly would love for you to attend. Stop sharing if I can.
Great.
Sorry, certainly not as good as Ryan on that sharing thing. I have to work on that. I apologize.
Thank you, Tracy. And we certainly hear your cautions, and they're well taken, but it's very good news. Questions for Tracy or Ryan?
Tracy, I think you're still sharing your screen. You're just sharing the version of everyone else.
Okay. All right. Sorry. Apologize. I'll leave the meeting. There we go. Boy, it went so much better last night.
It's okay. We got the content. That's all that matters. It's good. Any questions or comments?
I had one comment, Madam Chair.
Please.
Just wanted to, one, acknowledge the great work of everyone who has been working on this for what 13 years or so, and had the foresight to set this up and get us in a position where we can have a plan that at least now is fully funded. Wanted to just, so the board was aware, talk about kind of the real world impact on budgets with this change. And it's fairly substantial. We would typically budget as part of the benefit rate a contribution into that OPEB trust. We've been doing that for quite some time because of where the fund stands now. And again, I always caution, as Tracy noted, subject to change, but at least where things stand now for planning purposes, that contribution that we would make that would be part of that benefit rate that campuses would pay, we do not need to make that in this year or at least for planning purposes in the coming years. And so that is a direct savings to the benefit plan. I've talked about before, when we are able to keep our benefit rate steady or only going up by less than a percentage point, it is a reason to celebrate. A lot of those pieces in there grow substantially faster than inflation. So we kind of applaud ourselves when we have a benefit rate that only creeps up a little bit, and it's still well over 50%. It's still has been what I often refer to as unsustainable. Growing a little bit every year eventually gets us to a 60% rate or some other number that is just getting out of control. With the changes that Tracy talked about today, for the current fiscal year 22, we were able to drop the rate from 52.4 down to 50. Rather than moving up to 54% for the 2023 budget, we're actually going to keep that or lower that to 51%. So those are savings that will translate back to campuses. It will not fund all of the gap that the collective bargaining agreements have opened up, but it is significant savings, and it will be incredibly helpful, and it will really bend the curve in the out years when we start talking about what those gaps would be. So, want to acknowledge the great work that we're doing now and how it relates back to our budgets that we'll start talking about more and more with this committee.
Yeah, congratulations, and what great news to end the meeting on. Comments, questions? Hearing none. Remarkably, if there's no other business, we are set to conclude 6 minutes early.
The new chair is far more efficient than the former.
Just lucky. And it had great help from all the presenters. So thank you very much. And we'll see you in November. Well, we'll see you this afternoon. Bye.
Sounds like the audit committee is the place to be this afternoon.
Yeah.
There.